If you're age 70 and a half or older, there is a way to give to charity and lower your taxable income at the same time. In the next 10 minutes or so, you will see how a qualified charitable distribution or QCD can help you support causes you care about and keep more control over taxes and Medicare costs. I will also share the year-end deadline that trips up donors every December and how to avoid it. Hi, I'm Mark Fonville, CEO of Covenant Wealth Advisors, where we help individuals with over $1 million in retirement savings retire with peace of mind through a lifetime of clarity, insight, and partnership. So if clear, tax-smart retirement guidance helps you, please like this video and subscribe so you never miss a weekly tip. Well, let's keep this simple. A QCD is a direct transfer from your IRA to a qualified charity. You must be at least age 70 and a half on the day the money leaves your IRA. The key benefit is this: the amount you send by QCD does not show up in your taxable income. That is different from giving cash after taking a withdrawal. A cash gift may require itemizing to get any tax benefit. A QCD, however, lowers your adjusted gross income even if you take the standard deduction. So why does lowering adjusted gross income matter in the first place? Well, it can reduce exposure to Medicare premium surcharges known as IRMAA. We've talked about it in past videos. IRMAA stands for Income-Related Monthly Adjustment Amount. It is an extra charge on Medicare Part B and Part D premiums when your income is above certain levels. Lower income today may reduce the chance of higher premiums 2 years from now, because Medicare looks back 2 years at your tax return. Lower income can also reduce how much of your Social Security is taxed. Who can use QCDs? Well, IRA owners and IRA beneficiaries who are age 70 and a half or older. Traditional IRAs qualify. Inherited IRAs can qualify if the beneficiary is old enough. Now, Roth IRAs can be used, but there's rarely any additional tax benefit because Roth withdrawals are generally tax-free already. QCDs do not come from a 401k or 403b directly. If you want to use those funds, you would first roll assets to an IRA when allowed. SEP and simple IRAs qualify only if the plan isn't receiving employer contributions for that year. Well, where can the money go? It must go to a qualified public charity like many churches, schools, and hospitals, for example. It cannot go to a donor-advised fund. It cannot go to most private foundations or to supporting organizations. You also cannot receive any benefits in return, like tickets or meals, as an example. So, how do you actually do it? Well, the transfer must go directly from the IRA custodian to the charity. You can ask your custodian to send a check to the charity directly. Some IRAs let you write a check from the IRA checkbook, but the check must be payable to the charity, not to you. That's super important. Keep the acknowledgement letter the charity sends you. The letter should show the date and amount and say you receive no goods or services in exchange. So let's go ahead and talk numbers. The annual QCD limit for 2025 is $108,000 per person. Spouses can each do their own QCD from their own IRAs. There's also one-time option to fund a charitable gift annuity or charitable remainder trust through a QCD with a $54,000 limit in 2025. These are advanced tools. For most families, a straightforward gift to a qualified charity is really the cleanest path and the one that we see most often with clients here at Covenant Wealth Advisors. So time for a quick example. Imagine a Virginia couple with $2.4 million invested, both age 73. Their combined IRA RMD this year is $95,000. They give $30,000 to charities every year and usually take the standard deduction. If they take the full RMD as cash and then write $30,000 in checks, their adjusted gross income includes the full RMD. Their cash gifts do not lower income because they do not itemize. If they instead send $30,000 straight from their IRAs to the charities as QCDs and take the remaining $65,000 as cash, their adjusted gross income is $30,000 lower than in the cash gift plan. That may help them avoid a Medicare premium surcharge 2 years from now. It may also avoid them being kicked into a higher federal tax bracket. So here's a simple checklist you can use this month. Step 1, confirm that you're at least age 70 and a half. It must be the actual date, not just the calendar year. Step 2, confirm the charity is eligible for QCDs. Ask if the charity is a public charity under Section 170. Step 3, decide how much of your IRA RMD you want to satisfy with QCDs. A QCD can count toward your IRA RMD for the year dollar for dollar. Step 4, contact your IRA custodian and ask how to set up a QCD. Request that the payment be made payable to the charity, not to you. Again, super important. Step 5, aim to complete the transfer by early November or early December at the latest. And step 6, keep the acknowledgement letter from the charity for your tax records. So let's go ahead and close an open loop I promised earlier. The year-end deadline that trips people up is this. The money must actually leave the IRA by December 31st to count for that year. If you use IRA check writing, make sure the charity cashes the check by December 31st. A check written in late December that clears in January counts for the next tax year. If the funds do not clear in time, the QCD counts next year and does not offset this year's RMD. Again, super important. Let's handle 2 common questions that we get. All right, first, is donating appreciated stock better than a QCD? Well, donating appreciated stock from a taxable account can be great if you itemize and have low basis in your shares. You avoid capital gains and you may get a deduction. Now, a QCD shines when you take the standard deduction, want to reduce adjusted gross income, or want to manage Medicare surcharge risk. Many families use both strategies in different accounts to get the best overall result. Second, my IRA is a 401k. Can I still do a QCD? We hear that often. A QCD must come from an IRA. If your plan allows, you can roll eligible funds to an IRA and then do a QCD from the IRA. Now, get help from your custodian or financial advisor to make sure that the steps and timing are correct. And here are a few fine print rules to avoid mistakes. 1, you cannot make a QCD to a donor advised fund, a supporting organization, or most private foundations. You cannot receive benefits in return. If you made deductible IRA contributions after age 70 and a half, the amount of QCD you can exclude may be reduced. Talk to your financial professional about that rule. Do not request tax withholding on a QCD. The transfer must go in full to the charity. Remember, it should transfer in full. Keep your acknowledgement letters with your return. When you file, your tax preparer will report the IRA distribution and mark the taxable amount as reduced by QCDs. Now, here's a myth. A QCD is only for people who need lower required minimum distributions. Well, the fact is, a QCD can help any eligible giver reduce taxable income while supporting charities even before RMDs begin. Here's another myth. A QCD gives me an extra deduction. Well, the fact is, a QCD keeps income off your tax return instead of adding a deduction. That is why it can help even if you do not itemize. So let's bring this back to you with the second short example. A widow in Virginia, age 75, plans to give $20,000 this year. Her IRA RMD is $30,000. If she sends $20,000 by QCD and takes $12,000 as cash, her adjusted gross income is $20,000 lower than if she took the full RMD as cash and then wrote checks. That may help keep her below an income threshold that drives up Medicare premiums 2 years from now. And here's one more practical tip for you. Many families make their QCDs monthly or quarterly instead of one lump sum. And that just keeps giving on a schedule and avoids the year-end rush when you're busy during the holidays and when custodians might be the most busy as well. It also makes it easier to match gifts to church budgets, hospital campaigns, or scholarship drives. And here's your 3-point recap. First, a QCD lets you give from an IRA at age 70 and a half or later and keep the gift out of income. Second, QCDs can satisfy your IRA RMD and may help with Medicare premium surcharges and Social Security taxation, depending upon your individual situation. Third, avoid traps. Use a direct transfer, pick eligible charities, and get it done before year end. Now, if you found this helpful, please go ahead and like the video and subscribe for weekly retirement strategies tailored to folks just like you who are high net worth and have over $1 million of savings in retirement. If you want help planning for QCDs and aligning them with your RMDs, go ahead and click the link down in the YouTube description and you'll be able to register for our free retirement assessment to walk through that. If you want a checklist on how to walk through some of these ideas, go ahead and click on the free retirement planning checklist down below and you can download those immediately. Until next week, we'll see you soon. Thanks so much.